Today, we're going to crack open the playbook used by some of the world's top private equity investors. We are going to break down the exact framework they use to figure out where to put literally billions of dollars.
So yeah, this really is the billion-dollar question, isn't it? When you're managing that kind of capital, a simple hunch just isn't going to cut it. You need a system, right? A battle-tested process for telling the difference between a pretty good business and a truly great one. And this isn't just about picking stocks. This is a hunt for the most powerful, most durable companies on the entire planet.
So, what is the secret framework? Well, it all starts with understanding the three core pillars of any successful investment deal.
According to the investment firm Brookfield, success is kind of like a three-part dance. First, you have to find a great business. Second, you have to buy it at the right price. And third, you have to have a plan to make it even better. Now, every single step is crucial, but it all hinges on that first one. So that's what we're going to focus on. How do you even spot a great business in the wild?
So how do they do it? Well, it turns out there's a surprisingly universal formula. It's a 6-point quality check that works across just about any industry anywhere in the world.
That's it, just 6. And the fact that the list is so short tells you just how incredibly powerful each one of these attributes really is. Think of these as the absolute non-negotiables.
And here they are. This is the roadmap. These are the 6 core elements that make up the very DNA of a world-class company. So let's break them down, one by one.
All right, let's dive into the anatomy of what makes a business truly great, starting with the first, and you could argue, the most fundamental attribute of them all.
First up, the product or service has to be essential. We are talking about companies that are so critical, the market literally could not function without them. They're like the keystone in an arch. And what this does is it makes them incredibly resilient, whether the economy is booming or busting. Their product isn't just a nice-to-have, it's a must-have.
It really all boils down to this one question. If this business just vanished tomorrow, would the market even notice? Would it leave a giant, gaping hole? For a truly essential company, the answer is a definite, undeniable yes.
Number 2 is all about defense. A great business is like a castle, and it has to be protected by a deep, wide moat. These barriers to entry, as they're called, are all the things that make it incredibly difficult, expensive, or just plain time-consuming for a competitor to swoop in and try to steal their customers. I mean, think about it this way. Could you replicate this business from your garage? Or would it take, billions of dollars and decades of research just to even get close? The harder it is to answer that, the stronger the moat.
Third, it is not enough to just be in the market. You have to lead it. The leaders get all the perks. We're talking cost advantages, the power to set prices, and much higher profit margins. Everybody else, they're usually stuck in a downward spiral, just fighting for scraps.
Now we get to what our source calls the single most important factor for business quality: stable cash flow. A great business is essentially a cash machine that just runs predictably, rain or shine. And that stability is what makes it valuable, what makes it financeable, and what ultimately makes it a lower-risk investment.
So the key question isn't just, is it profitable today? It's, can it sustain that profitability for years and years to come? You see, investors are looking for durability, not some temporary spike in profits.
And number 5 builds on this idea perfectly. A durable advantage isn't just a moat, it's a moat that gets wider and deeper all on its own over time. Think of a brand that just becomes more and more trusted with each passing year. The best businesses don't just defend their position, they actively strengthen it.
And finally, number 6, large-scale operating leverage. Now, this is about finding businesses where small, smart improvements can produce a massive impact. Investors want companies with the scale and the structure where improving one little process sends these huge ripples of profit straight to the bottom line. It's about getting the most bang for your buck. So, if a company takes all 6 of these boxes, it's a guaranteed winner, right? Home run? Well, not so fast. Here comes the crucial reality check.
And this is the billion-dollar piece of wisdom right here. A great business is not automatically a great investment. There's one more variable that can change absolutely everything.
And that variable is price. You can find the safest, most stable business in the entire world, but if you overpay for it, you've just made a very high-risk bet. The price you pay is every single bit as important as the quality of the asset you're buying.
And this brings us right back to the complete picture, the investment trifecta.
It's not one thing, but three. First, find that great business using our checklist. Second, buy it for a great price. And third, have a real plan to get in there and make it even better.
So, how can you use this? You don't need billions in the bank. This framework is like a new lens for you to see the business world all around you.
Just remember those 6 attributes. Is it essential? Does it have high barriers to entry? Is it a market leader with stable cash flow? Are its advantages actually durable? And does it have that awesome operating leverage?
You are now equipped with the very same mental model that the world's top investors use to analyze and understand companies. It is a powerful tool for seeing the hidden structure of the economy.
So I'll leave you with this. Just look around you. Think about your bank, your grocery store, the software on your phone, or the company that delivers your packages. Using these 6 attributes, which ones are truly great businesses? The answer might surprise you.